Hey everyone, Tyler here from Equities Lab, and today we're going to be discussing a little bit about red flags and what they are in terms of investing. Historically, we all know what a red flag is. It means you shouldn't do something or you should run away from something as quickly as possible. And it's the same in investing. What do I mean by that? Well, in Equities Lab we have a red flag score. You can go ahead and import the red flag score. And let's look for anything with more than 3 red flags. So if it has more than 3 red flags attached to it, this screener will buy it. So let's see how much money this screener loses over the past 5 years. Now, of course, as a back test, it's on a quarterly basis. It is going into the screener each time, every 3 months, in order to buy new stocks that match this criteria and sell all the old stocks that no longer match it. Alright, now that the backtest is done, we can easily see that the screener got completely and utterly destroyed over the past 5 years, losing an annual 14.73% for total return of negative 54%. So you lost half your money by buying companies that had red flag scores greater than 3. Now let's go back to the home screen and create your standard stock screener. We'll do something simple here. Let's do market cap greater than 1 billion because companies with a market cap less than 1 billion tend to be a little bit harder to invest in. We'll go ahead and add let's add a momentum indicator. Change of close over the past year should be over 10%. So these companies have to have a market cap of greater than 1 billion and their closing price has to have gone up by at least 10% in the past year. Let's add one more. Let's import the Petrosky score on a yearly basis. The Petrosky score basically identifies how healthy a company is financially. There are 9 different factors. We actually have an article on it which will be included in the description that will give you a much deeper explanation. We also have a video of it, and that should be coming up on the screen right now. So we're going to be looking for a Petrosky score greater than 6. We're going to go ahead and press go, and a number of companies will be loaded in. So we have 416 matches. That means over 416 companies are, in the case of this screener, investable. We haven't dived into any of them, but I am seeing a bunch of really big names. BB&T, Google, Facebook, Nvidia. A lot of names that we understand and see very often. There are, of course, some weird ones like Agilent Technologies or Columbia Banking Systems, things that you don't see every single day. Now, there's no overlay here, so we want to go ahead and switch the tear sheet to synopsis with flags. Now this will give us both the green and red flags associated with each company. So if there's a specific company, say you wanted to invest in Google or Amazon, and you wanted to see the red flags and green flags associated with those companies, you can. And as we saw earlier, companies with a red flag score of greater than 3 tend to perform negatively over time. Let's go ahead and go over Domino's Pizza here. There are 2 red flags, quality minus junk getting worse, and high Olson O score, both of which we do actually have articles on, and I will also include those articles in the description. But we're also looking at 5 different green flags, and I'll be going over green flags in the next video that I will actually be recording right after this one. But this overlay gives you kind of an idea of the direction these companies are moving, because we just proved that red flags greater than 3 tend to do poorly. So if any of these companies have a massive number of red flags, then we know that we probably want to stay away from them. Now, we're looking for good companies here, or we're looking for companies that have historically shown strength. So there aren't going to be as many red flags involved. But if we say wanted to go into the biotech industry or wanted to go into one of these smaller industries where there are companies that aren't as strong going public, it will really identify companies that we as investors, as individuals, might want to stay away from. or companies that we might want to take that risk on, depending on what other factors come into play. I mean, this is a really quick, easy way to identify companies that you want to invest in or don't want to invest in, and get information immediately out of them without ever really having to leave this page. Thank you guys for watching. I hope you enjoyed the red flag article that just came out, and I hope you enjoyed this video. Check out the links in the description. You're going to learn a lot about quantitative investing, and I hope to see you at our next video. Thank you. Signing out. Goodbye.